Thanks, Pallavi. Very good afternoon to all of you. It seems light is only on us. I hope you are not sleeping after the lunch. Okay, coming back quickly, that I know I have a very great panel with me. So before I begin, let me request all of them to speak about themselves and for a minute and talk about that, what is that they are trying to do or their organization is aspiring to do, particularly in the context of collaboration with fintechs.
Thank you so much for that opportunity. So let me quickly introduce Refine. So we are a financial wellness platform. We work with some of the largest enterprises in India, not just public sector, but also private sector, PSUs. What we attempt to do is by partnering with the employer, we try to reach out to the employees and provide them with various financial services. The goal is to help people manage and improve their personal finances over a period of time. So I and my co-founder Chitresh, we started close to 2 years back. Since then, we have had a phenomenal growth. We have been blessed to have the support of the HR fraternity and the enterprises in general to be able to forward these benefits to the employees. That's quickly about Refine.
So I work for a staffing company. We have 350,000 employees on any day. But the challenge for us is really just, we've hired somebody every 5 minutes for the last 20 years, but we've only hired 5% of the kids who came to us for a job. And so that whole funnel of onboarding employees is a real challenge. And banks don't have clients, they have hostages. So we're trying to explore alternatives to them.
Thank you, Anil. So at India Post Payment Bank, we built a digital bank over the traditional post office network, wherein we are trying to use digital payment technology to transform the legacy post office into a new age banking access point. And in this regard, while offering various basic banking services, what we often try to understand is how we can work with the tech talent, especially the fintech startups, in terms of innovating the product to the last mile. And in that regard, I'm happy that whatever progress that we've made so far with a couple of startups has started gaining ground. And hopefully we should be able to do big in this. Thank you.
Thank you. At Entitled, we are building a financial and health services ecosystem that caters to low-income workers. Our focus is on ensuring that we build the data and the service layer that allows workers to get access to financial as well as the health service products that we're trying to enable. We partner with large corporates, of course, to embed these services within the HR or payroll ecosystem of these entities. And then on the other end, we work with service providers, give them data, help them understand the market that we are catering to so that they can build better products, and we can build custom flows with them that allows workers to be able to get access to services in as easy a manner as possible. Thank you.
So thank you all for a quick round of introduction. So let me begin with the session. So we know that India is home to so many startups. In fact, the last registered number that we have in India is close to 88,000. That includes over 2,000 fintech startups. So we have a very vibrant ecosystem of startups in India, and billions of dollars are being pumped into them in the hope that there are a lot of young enterprising and sometimes oldies that are trying to basically disrupt the entire ecosystem and make sure they have the right product solutions or the services for the masses to consume. So a lot of these things are happening, and there are 2-3 reasons we always say that why it is happening in India. First is digital public infrastructure or digital public goods that we see in India, and more of such things are coming in India. Second is the demographics of India, which is also helping us, which is rather helping all the startups to reap the benefit. And third is all about the sense of entrepreneurship. So India as a country has always been a little entrepreneurial as compared to many other countries in the world. So as part of that, actually about 4-5 years back, like we at MSc and CII, we came together, we created a program, and as part of that, we ran a very interesting inclusive fintech lab, what we call it Financial Inclusion Lab, which is part of Bharat Inclusion Initiative. And we basically accelerated a large number of startups and a lot while we were accelerating them. It's not that it was a one-way learning. It was a two-way learning even for us, that what works for them. We had our hypothesis based on our market landscape and our understanding, but still things do change, and we also kept on learning with that. And that's the reason we were able to get a very decent amount of success in terms of various numbers in the morning that people spoke about. So coming to the coming to the core of the today's session is that what we have learned from our working with the startup is that startups alone, they find it extremely difficult to basically make that impact or able to reach to the mass market. And if that is the case, then what is that they really need? So basically they need partnership, and partnership typically serves three purposes. What we say is first is co-creation or co-invention. And it's not that everything has to apply in all the settings. The second is all about the piloting. So basically pilot will help them understand and contextualize what works in different environment. And third is all about the scaling up. And third part is extremely important, considering that most of our effort was all about reaching out to the Bharat, which is a metaphor for low-income people, actually, for that. And what we also find that even people find it difficult to avail the services, and there are two reasons. One is that one core reason is they themselves they don't have enough capabilities or abilities to access digital services. Secondly, from the supplier side, we also see that the way services are planned, or the way services are positioned, they are not positions, or they are not placed in keeping the interests of those people, those particular segment. Particularly, I'm talking about low income. That includes a lot of excluded women and vulnerable section. So in our context, what we understand and what we realize that partnership can be of three types. First is very natural, which is a financial services player partnership, because typically they are incumbent, and we are dealing with the financial technology services, and this is a natural partnership that they should have. Second is what we are looking at in terms of partnership is all about the corporates. So corporates are basically, see, first they aggregate. So a lot of them, they are into platforms. So through that, they are aggregating. And there are so many other corporates also. For example, their supply chain, say the likes of Hindustan Lever. So they have access to the customer segment, which probably need additional services, which might come from startups and more so from the fintech service provider. And third is what we call it grassroots level organizations, or typically known as NGOs. So they also have access to the customers. They have trust of people, and that is what is really required if you really want to take the services of any startup. Because most of the time, what we also see in the field is that even if you have the right solutions, if people don't trust you, they don't transact with you. To quote an example from the banking industry, one of our large scales all India-based survey, we conducted a survey, and we realized that people don't walk up to the nearest business correspondent or an agent, which is available, say, next door, and they would prefer to walk up to a bank branch to withdraw their cash. So this seems very counterintuitive, but unfortunately, that is what it is. So let me begin with our panelists, and in the first part of our discussion, we will try to explore that what are the benefits or what are the risks that they see in terms of partnership, and basically what we are trying to see is that if Davids can work with Goliath, in the sense like a lot of people, they say these are unequal partnerships, and whether they would like to really enter into those partnerships, considering that someone who is very small versus someone who is very large. So maybe I'll start first with Apur, that maybe you want to talk about the benefit of such partnerships and collaboration from the perspective of startup, because you have a lot of experience.
Thank you so much. And a very pertinent question, particularly the enterprises that we partner with. They're some of the largest in India. And I'll quickly take you through how we were, when we were thinking about Refine and how we would partner with the corporates. It all started with a solution that we wanted to offer. So whenever these large enterprises are, while on the day-to-day they are trying to solve their own business problems, there are certain auxiliary problems that they really deeply care about, but that's not something that they do as a core part of their function. And we figured out that employee financial wellness is such an area where every single enterprise that we had a chat with, they were really concerned and deeply cared about their employees. In fact, they were working on various solutions on the HR front. They were already providing various health services, mental wellness services. But financial wellness services is not something that was, although it was very strongly on their radar, there were no service providers who would completely take over that entire solution. And I'm actually very glad that we have Mr. Manish here. So TeamLease is a partner of ours, and when we started, you can imagine TeamLease's sheer size. And we have been blessed over the last 1 year that we have been able to fructify that partnerships. We have benefited thousands and thousands of people. And that we have done, this is an example of what we have been able to achieve on the private sector side. Even on the public sector side, even government recognized that a lot of these facilities need to be provided to the state government employees, the PSU employees, and therefore we have been able to partner with them effectively. As long as they see the value in the service being provided, I see it's a great partnership and a great way to reach out to the customers, particularly in finance, where we believe that finance equals trust. People don't transact with you until they really strongly trust you.
So maybe you use the word financial wellness repeatedly in your discussion. You want to elaborate a little bit around that? Because there is I think a lot of people understand financial wellness in a different perspective. So maybe from your perspective, what?
Absolutely. And that was the first question we asked ourselves as well. What are the solutions that really comprise of a financial wellness platform? So the first thing we realized is during our entire curriculum, start all the way back to school, we are taught physics, chemistry, maths, and these are subjects that we may or may not use later down the line, depending upon what vocation we pick. But one thing that everyone uses on a daily basis is personal finance. And that's never covered in any of our curriculum. Only if you go very specialized into the field of finance is it ever being covered. And we saw that as a massive gap. So financial coaching is one of our key elements of what we do. But we realized that financial coaching by itself is not sufficient to help you solve problems. You need to give people tangible tools to be able to solve their daily needs. And that's where we were the pioneers of this concept called earned wage access in India. So what it allows people to do is withdraw whatever they have earned in real time within 60 seconds from our platform. And this way of accessing your own income makes sure that you're not borrowing from these payday lenders, and you are not borrowing from your future income. And that is what gets people into the risk of getting into a debt trap. So you're only using what you're earning rather than your future income. So that's a critical element of where we started. And both of these solutions have been greatly adopted by all of our clients. Over time, what we did is we also learned from these customers over the last 2 years. And we are now have a plethora of other services. We realized that the reason people get into these urgent financial needs, mid-month financial crunch, is because they don't have enough savings. So we have started offering saving solutions. We realized that health insurance in India, it's mostly provided by the employer, and there is very little awareness on part of these individuals that what health coverages they need. And that's where we started offering pocket insurances, which educated people in a very tangible way of what kind of coverages they can get, so they can actually go and figure out what coverages they need for their families. So there are plethora of these services that we are providing, but it all starts from the right set of financial coaching tools and then providing all the other tangible financial benefits.
Fantastic, fantastic. So I think we heard about the benefit of it. I'm just turning to Anshul, again, comes from the startup background, and maybe you want to share some of the risk or the pitfalls the startups have while trying to reach out to the large players?
Sure. So I think the number one risk or pitfall, whatever you might want to call it, is just network dependence. The fact that you are a large bulk of your users are coming from a particular organization, especially if you work with larger platforms with 2, 3, 4, 5 lakh workers. Organizations go through their own cycle, and while they might have decided to partner with you, their thought process or their priority changes over a period. And so you have to continue to work with it and ensure that you're built in a way, or your integrations are built in a way that you can continue to enable access while their priorities might have changed, right? They might not give you access to data, they might not market you, they might not create awareness on your behalf. How do you continue to service people if that changes? And so that's sort of probably one large risk. I think the other risk is, especially when you're starting up and the early phases, every large platform will have its own way of integration, and they would want you to do some kind of customization in how the service flow happens, how workers access services, etc. And so you might end up getting into that trap of customizing every time you're trying to integrate with a new partner, and you have to realize that early and build your systems in a way that your systems are open enough, flexible enough, so that you're able to do that. All right. So from my perspective, those are really two of the risks that one needs to know about. But there are a bunch of other benefits that Apurv just spoke about in partnering and aggregating employer networks.
Thanks for raising all the risks. So let me turn to the corporate side of it. And we have both Manish and Venkat with us. So Manish, actually, do you see benefits of collaboration? Because you have done it, you've seen it, and if we were to summarize that, what it would be?
I mean, we haven't seen the benefits yet. We are collaborating because obviously the current business model doesn't work at population scale. The next 25 years are going to be totally different. I mean, this is the 23rd year of Team Liaise, and we're a baby in diapers relative to the addressable market, right? I mean, we should have been 1 million employees if India's skill system had cooperated, if India's financial system had cooperated, if the regulatory cholesterol was lower. But in the next 25 years, that will be different. So if we want to live up to our potential in the next 25 years, it's not about more cooks in the kitchen, it's a different recipe. And different recipes don't always come from incumbents. They come from innovators or people at the margin. So we obviously hope that we will find some non-linear solutions to our onboarding problems, to our payroll problems, to our social security problems. I mean, to just the fact that why should I be dealing with finance as an employer? They should already have some kind of bank account as a part of onboarding, which is not true for almost 60 to 70% of the people we hire. Second is there is very little to learn from the rich countries, right? I mean, every time we talk about primary education, somebody points to Finland. If everybody talks about skills, you point to Singapore. I mean, there are that many people in Chandni Chowk or Koromangla, right? I mean, I'm sick and tired of, trying to study popcorn stands. It's not going to work. So if we're going to have to find solutions to these problems, they're going to have to be, I mean, you can study best practice, but they're going to have to be sort of homegrown because of population scale, right? I mean, India Stack is an Indian innovation because it's been architected for population scale. I think you had Nandan here in the morning, right? Or was Nandan there? Yeah, he'll be there later. Okay. So yeah, so I think, I mean, obviously India's CTO will give you all the gyan he does later. But I think the population scale solution for employers like us, and I know we're a staffing company, so we're peculiarly in our 3 lakh people that we need to hire every year. But we do too many things that as an employer we should not be doing. I know it's sort of core and non-core, it keeps blurring between operations, what is core competence, what is outside. But I think as employers, or at least as a staffing company, I'm spending too much time doing stuff that either technology can do or somebody else can do, or the people I hire should already have. So I think the only way we're going to solve that problem is by partnering with people who are more hungry than banks, people who are more innovative than banks. I mean, we're trying to work with banks, but we've been trying for 22 years, and I don't think they're trying to serve or cherry pick a certain part of my client base or my employee base. I mean, you love me, you love my dog, right? I mean, you want the sexy part, you have to take the crap away also, right? You can't just cherry pick the profitable customers and then leave me with the bigger problem. So I think what we're trying to find a solution is to the cherry picking by the current financial services. What we're trying to find a solution is to scale and essentially to anticipate the next 20 years where the current model just won't work.
Thanks, Manish. Very interesting insight. Just turning to Venkat. So, Venkat, you have already embarked on a journey, what we call it Fincluvation, and as part of that, you have been proactively interacting with the startups. Based on your experience so far, and maybe you can bring in your other experience as well, that what are the risks or the pitfalls that you see while you are collaborating with them? Because we know that there are some benefit, but at the same time, it doesn't come in isolation.
Yeah, I mean, before talking about this, I would like to talk about the approach, the traditional approach we normally take, as far as technology procurement is concerned, and especially for institutions like us, operating in government space. Anything to do with technology is always fraught with three-step process. One is tender, vendor, and what ultimately happens is a blunder. Okay, so it's a three-step process, and we end up losing money big time. And the traditional technology players, what we've seen, at least in whatever experience that we had, it's not always very good. I mean, as compared to whatever experience that you have working with startups, because there's always a skin in the game as far as startups are concerned, because that hunger is there in terms of solving a problem. Whereas in case of traditional technology players, that is not there. I mean, they're always after increasing the number of mandates and how much money I can get from each account, it's more like that Chennai Autowala strategy. So that's how it goes. So these are some of the risks, when it comes to deploying traditional technology players. Well, you can't totally write it off because they can bring you stability in terms of the technology strength. So I would like to split that into two parts. As far as your core technology components are concerned, you can definitely depend on the tested technology models and players. But when it comes to solving the customer problems, especially in terms of your channels or the new innovative products, I think that's where the collaboration layer exists among all the players, be it bank, non-banks. And that is one of the area where we found, at least in my experience in the last half a decade, working with various fintech companies, whether it in this bank or in the previous bank, I find that we were able to solve a lot of problems, number one. And number two, there is a cost efficiency which comes into play, right? And you don't have to really spend up too much of money. I mean, we all know how the traditional banks, the big banks have spent in terms of building up the huge digital assets, whether it is Kotak 811 or any other. The same thing, if you probably try to create in a collaboration mode with startups, it's almost 1/10 of the cost. I mean, let me tell you, that's the rough calculations what we have seen. And the customer experience is more or less the same, or it could be even better. So these are some of the benefits that definitely come when you collaborate with these startups. At the point of risk, yes, there are certain risks working with these startups, because you never know, what happens with these smaller, tiny entities, in the corporate world, when it gets taken over. So ultimately, where they end up, yes, that uncertainty is there. But having seen the kind of advantages and benefits that you get from collaboration, that completely outweighs any risk that it possibly may offer. And not only that, even some of the banks can actually get into that. Suppose if they feel that a particular potential startup is good enough, and they can get into the investment or investing into those startups, and then they can take over also. I think there are a lot of ifs and buts and a lot of options that are available. I would say that risks are not many, in the light of whatever benefits that we have.
So Manish and Venkat, I have a small question. So because this is what I have heard from some of the corporates, including banks, is that there is a possibility of high risk to the brand or to the reputation. Do you subscribe to that view?
No, I think that is always, that always depends on how you manage and the kind of governance that you bring in with this. So there's always a fine line between what a regulated entity can do, what a startup or a non-regulated entity like startup can do. As long as you respect and appreciate the space in which you're operating, there should not be any problem. And fortunately, the recent regulatory intervention was specifically in this context. If you look at the kind of intervention that regulation had made is because of the fact that somewhere regulation feels that one is encroaching into the other. As long as that does not happen, I don't think there is any damage to the reputation, and that's for regulated entities like banks to manage. I mean, you're cognizant of what all reputation that you have, and that's where you have committees like outsourcing and all, where you get into a specific reputational risk aspects, and you are supposed to do this on a periodic basis. So that's not a big factor, I would guess.
I mean, obviously anything new has risks, and where you stand on the issue depends on where you sit. So I think we all have figured out how to sort of calibrate risk-taking with risk mitigation in some sense, right? I mean, it's better to sort of balance revolution and evolution in stuff like this. I mean, whether it is at a country level in the way we think about say UPI versus NEFT versus others, or at an entity level for us in terms of what is the exact problem that is being solved here, what are the possibilities of mis-selling, what is the information asymmetry between the provider and the employees. So I wouldn't worry at this stage, otherwise then, driving licenses were probably issued 35 years after cars were invented. If you issued them up front, then it would be really hard to sort of figure out how to get a good car going. So it's a balance. I mean, I think that there are some real mis-selling in going on, but drunk driving is an argument against cars, right? So.
Thanks, and thanks for these encouraging words. So coming back again to Apoorv, you have partnered with multiple organizations, and I think your journey must have been a ride, because you reached So you reached 3 million workers in a very, I would say in a very rapid pace. So would you like to share your experience with us? And one very important thing that we want to hear from you is that what is your advice to, say, startups like Entitled or someone else, those who are trying to forge these partnerships?
Sure, thank you. So 3 million customers across 300 plus corporates. When we started, one thing that we were very clear on, we wanted to move fast on the technology side, and all the risks we undertake are on the technology side. One thing is non-negotiable is compliance. So the reason we were able to grow very fast, and even with RBI, and thankfully so, clearly identifying how the regulatory mechanism works, we were not impacted in any way, and we were able to continue to provide the services that we did because we were very conservative and on the compliance side. As aggressive we were on the and innovative we were on the technology side. So that's something we took care of day one, which allowed us to have a very solid fundamental background. After that, we constantly innovate on the products. So we try to understand from the clients. Early on, we felt like the solutions would operate in a particular way. As and when we started operating across industries, we started realizing there are very specific needs of each of those industries. And we had to tailor the solution for those industries, otherwise it's not as relevant a solution as it could be. So we continue to innovate on the product side through the learnings that we got from our customers. And ultimately, if the end employees, in our case, are seeing the benefit, that's something they are able to convey to the employer. And then that's what the employer was after from day one, was to be able to create a massive impact on their employees' lives, improve their personal financial wellness, and ultimately the result they got from their own side was a massive increase in retention. One of the things we did is we did a very thorough survey with Ernst & Young across a large number of corporates, where the research was to study the impact of financial wellness on people, and we realized that 80% of all the salary earners in India ran out of funds in the 4th week of the month. That's 80%, just how big that number is. And we realized that this is what the payday lenders, often a lot of them are actually unregulated. They were taking benefit and exploiting these people. So that's where we came in. We provided a solution to all of those issues. And the employees, when they had this psychological weight of financial burden taken away from their shoulders, the retention naturally increases. And that's what we have been able to prove with the partners that we are working with. There's a natural increase in retention, and it's a win-win for both the employees, employers, and us.
Thanks, Apur. So I think a lot of learning from that, and probably it should help all of us and those who are trying to approach the corporates. So let me again ask Manish, is that like if someone were to approach you for partnership, what do you expect from them? And secondly, do you expect them to do some of their homework before they come to you at all?
I mean, I think that if this world of fintechs has to work for us, we're not looking for sort of HDFC on a diet or HDFC on steroids, right? I mean, that's really, or a bank on steroids. Or we're looking for something different. We're really looking for something that takes away a lot of either thorns in the flesh or daggers in the hearts. We have two kinds of problems. Some are binding constraints, which we're not able to overcome, and some are just friction which add to our costs or which lead to client or employee dissatisfaction. So I think the most important thing that I would sort of look to is just not, my favorite quote is Rommel. He says, sweat saves blood, blood saves lives, but brain saves both. So everybody's offering sweat and blood is of no interest to us anymore. I mean, sweat and blood is a commodity. Everybody has it. It's really the brains which is thinking about how do I onboard faster? How do I think about the life cycle of an employee? If I have to offboard, how does that process go frictionless? So I'm just talking purely from an employer perspective, that we are looking for something different, because the current model of either KYC or of salary payments or of social security remittances is just not scalable, it's not generalizable, it's not replicable. That presents an opportunity for somebody whose business is financial services or combining technology with finance, right? The problem with pure financial services is you're not native to that thought world of APIs or stacks or stuff, which I think is where the innovation will lie. So I think at least I'm quite clear that we're looking for somebody to come and solve many of the problems which unfortunately have become our problem. But we have so many other problems in skills and education and labor laws that I have no interest in solving the financial services, the social security, and the payments problem. So I think that the way at least I'd look at it is you take away some of our problems, and we're happy to sort of work with you.
Manish, are you suggesting that, say, if someone comes to you with something which is not core of your problem, you are not interested?
No, that's not what I said. I said, I pay 3% of the ESI of this country. I hate it. I mean, crapola scheme, they don't have clients, they have hostages. I'm paid 200 crores of Provident Fund every month, or maybe more than that. I mean, if somebody finds a solution to the friction inherent in these processes, then I am happy to hand over that problem. I pay a lot of money for administration of Provident Fund, ESI, for accounts, for pensions. These are all in the realm of financial services interfacing with technology, right? Banks don't have solutions to those problems. So that's why I flag social security as I mean, India has the highest gap between chitti wali salary and haath wali salary, right? We confiscate 44% of salary for low-wage employees. Now, if you find a way to solve that problem for me, I'm happy to hand over that 44% of salary to people. So it's just if you box yourself into, I do payments, and most of you don't want payments, you want credit, because that's where you can sort of skim it off. But I'm really looking for a comprehensive fintech solution, which includes payment, which includes remittance, which includes credit, which includes onboarding. So I think that, and it's still early days, and with the current level and model we can work. But I'm going to be 1 million employees. I need somebody who can partner with me and grow with me and make the investments to handle those 1 million employees. And as of now, it doesn't exist.
Got it. You're looking for a full stack solution. Okay, so coming to Anshul, actually you have heard what is really required, and you know that you are also reaching out to some of the corporates. So let me ask you, are you able to get through them easily? And if not, what are the challenges that you are facing?
I mean, I don't think anyone would ever say that it's easy to reach out to corporates, but I did get a bunch of ideas from what Manish just mentioned in terms of trying to reach out to them. It's, of course, a challenging process, and I'll tell you what we have to do, right? Especially because of the kind of segment we deal with. Just selling financial wellness does not work for us. Just saying we'll improve the lives of your workers, there'll be intangible benefits that you will get, etc., is just not a sell, right? What we have to do is actually look at the structure of an organization and build a use case for it. Now, the use case could be very wide. The use case could be that there are workers that come onto a platform and need credit to buy equipment to work, for example. Right? The use case could be that traditional insurance policies just do not serve the purpose because, my gig workers work with me on a daily model. How can I give them insurance for a full year? The use case could be that, there is a lot of money that my workers spend in out-of-pocket health expenses, and they keep coming back to me and saying, okay, why don't you reimburse, right? So what I'm trying to say is that you need to look at an entity and build a use case, because only then will they come in and work with you quickly enough, and they will continue to work with you over a longer period, right? Otherwise, if the thought process while entering into a relationship is, it'll do something, everyone does earned wage, I should also do it, it'll really never be a sustainable association. And the employers or the platforms will just not put enough thought into what they're trying to do, right? So what we've done is try to look at, go wider in terms of products and see what is it that can help me solve more problems for corporates, and hence, therefore, can I build more use cases and then try and acquire corporate partners better. The other thing really is, and something that I spoke about, is the fact that your systems need to be open enough so that you're able to customize flows for different kinds of audiences. We get all sorts of entities. There are, and onboarding could be different in different places. There are employers that have everyone on a platform, which means that you can just be integrated on that platform and workers can come on board. There are other entities where they're not on a common platform at all, and what we might have to do is put up a QR code on site or something for them to be able to come on board. Right, so it needs to be flexible. I think we've reached a stage today where if I need to build a new flow for a new entities, we can do that in 3 or 4 days, right? And having said that, it's been a learning process, right? So those are sort of 2 main challenges that now we think we are at a stage where we can come up with those and continue to expand those relationships much faster.
So Anshul, if I were to ask you that tomorrow you have to make a pitch to Manish, will you be able to make a pitch and convince him that this is the right partnership?
A bunch of things that he mentioned about social security payments, about payments, salary payments, user onboarding. Those are all things that I can come back to him in a few days and say that there is a solution that we can put together on all of those.
So great. At least we will see one partnership, one collaboration from it. Okay, thanks for that. So coming to you, Venkat, that we know that partnerships and collaborations, these are the buzzwords, and they have been there for decades. Of course, there's still lot that we want to do. So I just want to hear from you that what are your expectations from such startup partnership, and do you expect them to bring something very specific on the table before they really want to talk to you? Or they can come back with idea, discuss, and then probably you're okay to co-create or co-innovate.
Yeah, definitely problem solving, as I said earlier, one of the areas where we can co-create is that we know of the problem, but, we don't have a proper solution. I can share one of our experiences that we've recently had, operating in rural markets. We know for sure that if we were to achieve a 360-degree financial inclusion, credit is very important. But at the same time, there are problems on the supply side when there is a demand. So how do we mitigate the problem of the supply side, in terms of data or in terms of information that is required for, say, banks and financial institutions to provide that lending facility. So which is where we found that a couple of solutions coming in, especially from some of the startups, where in terms of data gathering, whatever information that is required, through the startup solutions, we were able to find one of the solutions for the problem. So like that, what we look at is that, one is the ability to solve a particular problem, and also the domain expertise in terms of the ability to solve that problem. I think these are some of the aspects which we look at. But again, we, being in a government space, we are supposed to go through a certain process and procedure, and which is what we've done a year back, wherein we've also partnered with you, thankfully, and in terms of creating a structure around this program. And we're able to identify some of those potential partners, and we put forth these problems in front of them. And thankfully, we were able to find solutions, and we're already in advanced stage as far as taking them to the pilot stage. So it's more about the ability to find a solution to the problem rather than anything else. I'm sure technology can be used by everybody and anybody, but the way you can bring about this solution by understanding the ground level realities, whether it is pertaining to the last mile consumer or whatever facilities that are available from the bank side.
Thanks, Venkat. Manish, I know that you need to leave in another 4-5 minutes. So before we go further, actually, I just want to open it for any question that comes from the audience. Because Manish has to leave, though we have about 10 minutes, but he will have to leave in another 4-5 minutes. So we'll start with him.
I'm not leaving early, I'm leaving on time.
My apologies. So, because we started late, so in any case, he has some other commitment. Yeah, please. Can someone give him a mic?
Hello. Sir, I'm a big fan of what you built with Team Lease as an institution, in a highly regulated space. In one of your earlier speeches, you said, India will always be 2 steps forward, 1 step backward. And fintechs have always been building in this whole regulated space. Like, in terms of pushing the envelope on innovation versus compliance, how should founders really look at that, pushing the edge?
See, I'm here in my Team Lease avatar. I'm not here in my RBI, other stuff. So I think that would not be a fair question for me to answer from a financial services perspective. But from a labor law perspective, it's clear, right? You can't comply with 100% of India's labor laws without violating 10% of them, right? I mean, we have 21 definitions of wages. We have 16 definitions of workers. So that is why I spend so much of my time on the ecosystem, right? Fighting the battle for ideas. And labor codes are an outcome of making the case that India is being held regulatory cholesterol in various ways. So I think that there are certain businesses where addressable market is obvious, and there are certain businesses where the real potential will be when the addressable market's binding constraints are removed. if you find yourself in that business, as I do in Team Lease, I mean, I would be 1 million employees if the regulatory cholesterol came down, but there would be lots of people who would, not think that's a good idea. Lots of people don't think. I mean, lots of people think we're a disease which needs to be cured, right? So in the labor market. And so I think that the nature of India is that the battle for vested interests aren't as powerful as we think. If you're sort of willing to stay the marathon, and this is 23 years of Team Lease and we're still a baby in diapers, is my view of the world. I think many of you will have to take that view. India is not a big market. It's a small market with a big potential. So don't confuse your addressable market slides with your ability. But I do think the system responds. I think you have seen the regulatory sandbox at RBI. You've seen many things. I mean, you've just seen UPI. If it was left to SBI and HDFC, we wouldn't have UPI, right? So I think it's important to recognize that India, the battle for ideas is worth fighting, and it does work, in my experience.
Yeah. In case, if there is any question specifically for Manish from the audience? Yeah. Okay, so if there is no other question, I have a very quick question for all of you. This question comes from the fact that a large number of activities, particularly in the financial services, they are regulated. And just building on that, it's not exactly about innovation versus regulation part of it. It's all about considering the regulation that we have, whether it is helping the partnership or it is hindering the partnership. To give an example, say for example, in international market in Europe, we have PSD2. So that necessarily means that there is a collaboration between large institutions versus small institution, and that is mandated by the regulation. So versus something that what we have, what are your views that is it helping you to collaborate, or it is rather coming in the way of your collaboration? You want to start?
Yeah, so it depends on which kind of regulation. A lot of them are very, very helpful, because when you're trying to partnership with a large enterprise, they have large responsibilities. I mean, as a fintech startup, like we started with 3 odd people just sitting out of a room working together. The responsibilities on the other side are significantly large. They are like Team Lease, for instance, represents a large part of Indian economy. So they have very heavy responsibilities, and if they are going to partner with you, you have to live up to a lot of them as well, because that's how deep partnerships work. So what the regulations allow is that they give you a natural ability to prove certain things, whether it comes in terms of data security. So having clear norms around various InfoSec certifications allows you to show just that you are capable of doing that. Being compliant with regulations of RBI, of labor law, we spent a lot of time working with a lot of different entities trying to get clearances from a labor law perspective, because we do work with large employers and providing services to their employees. So although it's definitely a lot of work that we would much rather not do, and we would much rather innovate, but at the end of the day, it allows you to build that confidence with the partner as well. So I would say for a lot of them, there are massive benefits and there's a massive plus side to it, but it's definitely a lot of work, which in an ideal world would not exist, but so is regulation. It is there for a good reason.
I think Manish will not agree.
Well, what is your question? Are you saying regulation is a bad idea or a good idea?
No, it's not about that. Whether it's helping us or it's hindering the partner.
Well, I mean, I think that is just an irrelevant question, because many of us in the early stages of reform in 1991 used to tell the government, this grass grows at night while you sleep, just get out of our way. If the lack of a state made countries hotbeds of entrepreneurial activity, then Swat Valley in Pakistan and Waziristan in Afghanistan would be hotbeds of entrepreneurial activity. So before you sort of think that just an invisible state or invisible regulation will really will explode India, that's wrong. It is Paracelsus, he was a Renaissance physician, he used to say the dose makes the poison. right? Anything powerful enough to help has the power to hurt. I think when I say that labor laws are dysfunctional, I do not ask for no labor laws. I think no labor laws would be a dysfunctional situation. The question is, do we need one definition of wages instead of 17? Do we need one? I mean, I think there's a plumbing and a philosophy aspect of regulation. Today we put out a report, there's 67,000 compliances, there are 26,000 ways to go to jail, there's 6,700 filings. I think that is sort of the plumbing which is dysfunctional. But do I say that I think a good regulator or a well-regulated market is much better off in terms of its scalable potential and in terms of just its sustainability. We don't live in an economy, we live in a society. I have to keep reminding everybody, we don't live in an economy. I mean, many of the issues you talk about are, there is an equal and different point of view in society. So we have an onus in the economy to convince society about what, and then society obviously doesn't trust us, and we all have deficits, right? The government may have an execution deficit, the private sector has a trust deficit, non-profits have a scale deficit. So I think the regulatory frameworks in pre-1991 were excessive. I think our notion of what Ronald Reagan or Margaret Thatcher did in the US and UK is misunderstood. So I think that anybody who has ambition will welcome good regulation, will fight the battle for ideas to shape regulation, and will actually recognize that we need that license to operate from society. I'm not talking about license.
Yeah, I would like to respond to this. I mean, it's important for us to understand that in a fast evolving space like technology, if you're expecting regulation to keep pace with it, I think it's little far-fetched. I mean, that's where honestly some of the regulators, when we interact, express that in such a fast-paced environment, it's always difficult to catch up with that. But having said that, the open-endedness of regulation is inbuilt. And if you look at the kind of development that have happened in the past decade, whether it is UPI or account aggregator framework, in fact, the answer to PSD2 of European Union is account aggregator. So that's the framework which we have. And if you look at the fundamental principle that the country had always been following when it comes to financial services or digitization is about the democratic principles, where you just don't concentrate power with one or two entities, but it's built by all the institutions put together. So which is where that fundamental principles are, that core principles, as long as those principles are met, I don't think any kind of innovation is always welcome. And that's where it's important for us to go by the pulse, or rather the spirit of a regulation. So as long as you understand that, I don't think we will cross the line.
Great. Anshul, in case you have any view or?
Sure. So I don't think any regulation helps in building relationships or makes it easier to work with platforms. But I think on the flip side, what is really needed is stability and clarity. As long as there is stability and clarity about what the regulation says and what direction it's moving in, that makes it easier for you to think about a path of what you're trying to do, have more clarity about it, build your systems around it, etc. But by itself, I don't think regulation would help it as such.
Yeah. Sorry. So, one second. Can someone give the mic, please? Here, in the front.
I'm Mitesh here from Miss Call Pay. So, like we are talking about fintech partnerships actually, and so there are two ways to look at it. What I believe actually that many of times when fintechs are treated as partners, the banks typically look at them as vendors. And for them, actually, there can be relaxed terms of coming in as vendors or some kind of, single vendor kind of an approach or something if they have patents or something. But there are cases in India which we have seen where fintechs typically come in at a different level. I don't know how do we classify them? For instance, actually today, with SBI, you have Google Pay working, also WhatsApp Pay working, and both of them have handles from UPI, for UPI handles actually, if you look at it. So, so the SBI has given OK SBI for Google and WA SBI for WhatsApp. Now, actually Google is not their vendor. So Google is kind of a partner. So very interestingly, actually, now when there is a partner, there is no vendor kind of an arrangement, and there is no vendor RFP, RFQ kind of a thing that is required. So when SBI can do it, why not other banks?
Mitesh, get your point.
In fact, I'm with you, 200%.
Wow, thank you so much.
Okay, see, I would say that old habits die hard. Okay, it's a cultural problem. And more importantly, we're all, as entities operating in, the government space, we have to fear a lot as far as those procedures are concerned. And you never know how it will hit. So that's the real problem. And that's how these banks have grown. And these are the norms which even I tend to question, why we should look at. So it's more of a cultural shift that has to happen in terms of the way we perceive and in terms of the way we look at this. But traditionally, as I said, I mean, that's how I started. If you look at, my earlier point, that we all start with, tender, vendor, and then at the end of it, it doesn't really help anyone. So that's where the institutions have to evolve in terms of understanding and in terms of giving it a different standing altogether. It need not be a vendor. While the partnerships does a part of what vendor does, but the stake that this partner has is much bigger than a normal vendor.
Okay, thanks. If anyone has any question, I think otherwise time is up. So I'll just quickly, 30 seconds, I'll summarize and close. Okay, thanks. Mitesh, maybe you can have question with him separately. So I think we discussed in detail, and we know that there are definitely a lot of benefits from the partnerships and the collaborations. And it comes with a certain set of risk. And I think both the corporates, they agreed that risk or the pitfalls can be handled in a variety of ways, and that's very encouraging that we are focused more on the benefits and more of the what is that we are going to get from those partnerships. We had plenty of learning more so from Refine and that how it works, and Manish also spoke about that what is that they really are looking for in terms of solutions. So this gives us some food for thought that if we were a startup, how do we approach them, how do we work with them? So with that, I'll just close this session, and I would say thank you very much to all my co-panelists for sparing their time, and thank you all audience for listening to us patiently and having your interesting question. Thank you all.